I think that we continue to believe that, that they will continue to taper at this measured pace. They will end it. They are looking at a lot of factors. This particular Fed chairman is focused on employment and jobs, and I think that earlier there were concerns about inflation going above, but I think that the employment outlook is very key in terms of being able to spur further economic growth. We see the hiring intentions, we see the intentions for capital spending and the improvement in the production areas, but what we haven't really been able to see is that wage growth will pick up. In the trucking area, which is another area we like in the small cap space, the truck drivers in the United States, their wages have not increased over the last 8 years. We think that there are regulations as well as pickup in economy as well as their positioning and such that we think that we really do believe that the wages, in particular for the truck drivers, will increase over time, but until we start seeing that the employment situation is such that you really need to spur that to create the belief that you could spend your money and invest it, etc. So overall, we think that next year, probably in the first half or so, is the consensus of the first rate hike. And what we've seen historically is that the U.S. markets they will pull back only after the first rate hike and not before it. And we have seen that U.S. small cap stocks, like I said, do well in a rising rate environment. But we have to remember that we believe it's going to be measured, and it is dependent on economic growth in the U.S. as well as globally. But our indications, and I think the market is discounting that we will see some increase next year in the first half, or latter towards the first half.